Because we're here at the UBS Family Office Day, talk to Chairman Weber about, first of all, what your families, what your high net worth individuals, what your big millionaire and billionaire investors are doing with their money. We spoke with Sarah Ferrari earlier, who runs the family offices, and she said a lot of them are sort of shunning hedge funds and getting more into private equity because hedge funds weren't returning enough. They were charging too much, and private equity is a vehicle they've been in for a while and are ramping up their exposure to.
Absolutely. You have to see that the family office business, it usually is the most entrepreneurial clients we have, and they've been investing for some time already in private equity, but they're actually driving that up. Rates are normalizing for fixed income, and there's a lot of money on the sidelines at the moment because of the trade disputes, but the entrepreneurial part, that's where many of these family offices are investing. You know, up to 40% of those portfolios are invested in private equity. There's a high proportion of alternatives in those portfolios, but hedge funds are performance related, really trending down. So they do what they know best, and that is invest in companies, either their own or in other companies where they help companies flourish.
It's interesting. You've just done a survey, and the biggest portion of these wealthy investors have their fortunes from manufacturing or from operating businesses. You say that they're concerned about the trade wars. Are they really holding money on the sidelines as a result of that?
There's some money off the sidelines across our entire investor base. We're seeing that. We expect the impact of trade in the U.S. To kind of kick in the fourth quarter and to lead to some soft spot in the fourth quarter into the first half of next year. So we don't see it in the data yet, but clearly with all the tariffs that are in the pipeline, that's going to impact, at least as a one-off, on the level of performance, and it will linger some time for the economy to pick up speed again. So yes, there is some caution around the way forward. It's not massive amounts, but we're clearly seeing the biggest impact on the investment side of things rather than really on the trade side yet. But that money on the sideline will return as soon as there's a clearer way ahead. So it's a temporary dip, and we think it will last 2 to 3 quarters, not much longer.
So where does the money go back? We've seen emerging markets obviously get hit hard. We've seen Europe get hit hard on the equity side. Where does the money, you think, go back when they're ready to put it back to work?
So my view is that basically the U.S., it's almost like a consensus trade. At the moment, everyone's long the U.S., is bullish about the U.S. outlook, even if there is a short-term performance issue in 2 or 3 quarters. Medium to long-term, the U.S. economy is very strong. It's growing at least in 19 and into 20 with strong rates. Then it might be facing some of the headwinds with the running out of the fiscal stimulus and monetary policy moving above neutral. So yes, the U.S. at the moment is still the most consensus trade. I think there is some underestimation in global markets on how dynamic Asia-Pacific will be. I've just been to the region for 2 weeks, including a week in China, and I think global markets underestimate a bit the anti-cyclical stimulus that the Chinese have put in place to really strengthen their economy. The market is very focused on the impact of the trade disputes, but I think the Chinese have reacted fast and quite decisively with counter-cyclical measures, and that will help the economy go along, and that will have a big impact on the region and pull the region along. So I look at Asia-Pacific at the other growth area where the market, in my view, has maybe been a bit too pessimistic. That will come back as the U.S. grows, will take a sort of soft patch. Asia-Pacific, in my view, that what we're seeing there is reignition of growth.
All right, let's talk about those two things. First off, China. Will they come to the table? Does Donald Trump have the upper hand? Are they going to have to make a deal at some point?
Well, I think China has made very clear so far that on trade, they will not retaliate one for one, but they will put measures in place that if the trade dispute keeps escalating, they will not just limit it to the trade in goods. I mean, so far we're talking about the trade balance. We haven't really talked about services, financial services included, or about technology. So I think the Chinese will want to broaden the negotiations out from purely goods trade into technology transfers, and also to within groups. You see a lot of product and production chains diversified along multinational companies, including a certain element of China in their production capacity. And And that will be part of the negotiations where the Chinese say, well, this is actually not exports of finished goods. These are production goods that go into a final assembly in the U.S. and other places. Shouldn't really count in the same way if corporates take that decision as if it really was the export of goods. And they will broaden it to financial and other services, saying we should really talk about the current account rather than just a trade balance, which I think is an argument that has some merits. It means broadening the negotiations, and Europe will roughly do the same.
From your view as the chairman of UBS, how open a market is China? Because there's so much talk about free trade and multilateralism from the president and the vice president there, but it doesn't seem that they're really acting on that when it comes to European and U.S. businesses going in and making money there.
That's true. And I think the international community taking a joint and coordinated approach to making clear to China that we accepted the speed at which you opened up over the last 15 years when you were only 44% of the global economy. Now that you're almost 20% of the global economy, you're a much bigger, more important, more systemic player. That speed has to reflect the new emerged China in the global economy and your global role. And I think the economy has been stronger. I think the Chinese will continue to open up. The issue is about speed, and I think the Chinese can and will do more on speed because there's so much pressure, not just from the U.S., to really honor these international trade negotiations, to open up in a two-sided manner, and we're seeing it in the financial service industry. I can tell you I've been to China over the last few years. The recent visits have clearly indicated that there will be a faster opening up. We moved to a 51% stake for our own entity in China, and we were told they will be more liberal and there will be more dynamics on quotas. UBS, for example, has 24% of the northbound trade on the Hong Kong-Shanghai Equity Connect market. On the southbound, it's only 2%. That means we need more quota to increase our stake also for Chinese citizens to invest in the rest of the world. China is already open to foreign investors, and I think that's the major work. They need to open up for their own citizens, for their own financial institutions to invest in the rest of the world, and Western banks can be helping to make that in a stable and predictable manner.
You've done a great job with your asset management business in all of Asia. In Europe, obviously, you're a heavyweight as well. In the U.S., you could grow more on that side. How do you expect to do that? How do you expect to entice more high net worth clients and institutions to put their money?
Well, for example, the Global Family Office event here is already one event that shows that is the target range of clients that we have here, which is wealthy individuals which have professional advice on their side with family offices that run their portfolios. And many of these families solve generational problems. So we help them in innovative products. Many of them have millennials in the, they're the new inheritance of all these wealths. And they have much different investment motives, for example, on sustainability. So we help bring sustainable investments to them. You have to be very innovative in that space. For example, we work with the World Bank to help private clients invest in World Bank activities, which has a sustainability element but also a return element because, World Bank debt trades above U.S. Treasuries, but it's guaranteed by all governments of the world. So, innovative financing solutions to move beyond investment in traded assets, but to move to sustainable investment, startup investment, infrastructure, that's going to be a key thing. These entrepreneurial families, we want to invest into that, and we need to bring them those solutions. So we'll give you more details on 25th October when our CEO has Investor Day on how we want to achieve our ambitious targets, but it's very clear we have a strategy that is centered on wealth. We are the number one in globally, and we want to push that business to be more client-centric and to really deliver dynamics.
You're in charge of strategy as chairman and succession as well. I wonder, with the departure of this year Teltner and Orcel, as we've been reporting on all night and this morning, are you concerned about succession now?
No, not at all. We have, for me, there's two things to be said. Andrea did a great job when he was with us, a very focused, capital-light investment banking model that was really very dynamic, contributed, you saw that in the numbers for the first half year, contributed sizably to the performance of the industry. So he was a very good executive, and whilst we do regret leaving him him leave, it is basically witness of the fact that we have a very strong talent bench. We're very proud that our executives are picked to lead other banks with it's basically a verdict of the strengths of our talent bench, and we're not worried about our talent bench. We continue to evolve our talent bench. We've added 2 very good individuals to our group executive board. I've been in client meetings with both of them. Both Rob and Piero are very client-centric. They have many years in the bank, very experienced senior executives, and I think they will help us to continue to implement our business model. With UBS, we have a business strategy, and it works. We don't need to change our strategy. We might have to change some people in the front line of doing the business, but they're all senior executives, very experienced, so I have no doubt that we will continue successfully to implement our strategy.